Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock with news that New Zealand currency is rising as commodity currencies are back in favour again. Bond yields are up, equity prices are up, risk is back on. And the OECD is reporting that world trade in goods reached a new record high in the second quarter of 2021, beating the previous record in the first quarter of 2021. But a large part of this rise is price inflation in commodity prices and demand stress due to shipping and supply issues around semiconductors. Trade was uneven, however, with most changes confused by the varying 2021 bases. Most advanced countries saw rising exports, but China was notable for its export shrinkage. And that is consistent with what Chinese officials are warning about the rest of 2021 and 2022. In the US, new home sales were expected to dip in July, but in fact they rose. While they're running well below the pandemic-affected levels of a year ago, they remain 10% above the equivalent 2019 levels. That may be a positive surprise, but the latest Richmond Fed factory survey in the mid-Atlantic states isn't. It is the first of these surveys to record a manufacturing slowdown in the US. All three component indexes for shipments, new orders and employment decreased, but remain positive, even if only just. These may have turned lower, but the cost and price pressures haven't. In fact, factories are pushing through increases in the range of 10%. And staying in the US, the extreme hot weather is shrinking crop yields. That will have global implications, and we saw reversals in China's commodity markets yesterday for corn and soybeans prices, both jumping. There are also reports that the US is short of fresh milk, not so much because of supply, but a surge in demand from reopened schools. And yesterday, prices for iron ore suddenly reversed and moved 7% higher in a surprise move. Coal prices rose so sharply, market trigger limits were activated to prevent an even higher scramble. Fears of undersupply are back in China. And just as the Ningbo container terminal reopens south of Shanghai after the pandemic shutdown, Shanghai's main airport is closing for the same pandemic exposure reasons. This too will roil cargo air freight to and from China, although there are plenty of alternatives for that. There seems to be no end in sight for the cost of shipping. In Japan, steel prices are on the move up. The US Treasury 10-year yield is up 4 basis points today at 1.29%, and the price of gold is just a touch firmer today, up $1 from this time yesterday, and now just on $1,806 an ounce. And oil prices have risen again, this time by another $2. So in the US, they're now just over $67.50 a barrel, while the international Brent price is just on $70.50 a barrel. And the Kiwi dollar opens today firmer again, back up to 69.4 US cents. Against the Australian dollar, we're slightly firmer too, at 95.7 Australian cents. And against the euro, we're also firmer at 59.1 euro cents. That means our trade-weighted index starts today at just on 72.8 and back in between the 72 to 74 range of the past 10 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.